Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be welcoming back Anthony Power. Our last video got over 10,000 views together, and in today's episode, we're going to be covering November production results from all of your top or favorite Bitcoin mining stocks. Now before we get into that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below what you think of Anthony's analysis from November results, which of these companies you're currently holding, and your top pick moving into next year's halving event. Now with that being said, let's get into today's discussion. Okay guys, so that's right. Today's video, we've got Anthony Power. He's one of the top Bitcoin analysts in the world, was actually a speaker at the convention in Amsterdam as well. So super excited to get his take on the November production results. And to kick things off, Anthony, I thought we should start off with your monthly summary.
Thanks for having me, Bryce. Great to be back again. Just to sort of set the scene for November, a number of things happened. Again, we saw that global hash rate continue to rise, so more machines coming online, and not just in North America, globally coming online, because the actual rate peaked just over a week ago at just below 650 exahash. And when you compare that to the start of the year, we were at 250 exahash. So that's well over 100% increase in hash rate. What does that mean for the miners? That means they're mining less Bitcoin effectively. So if the hash rate goes up, the difficulty will then become harder, which means that you're using more energy to mine a Bitcoin. And so, naturally we'd expect the production levels for November to be lower than October if the company hadn't increased its hash rate during the month. Another factor is November's only 30 days. So that's a day less mining in November. So that also has an impact. However, two things that can alleviate that pressure for the miners occurred in November. The first thing is transaction fees. We've talked about transaction fees before. So in some of the months of the year, I think May was a big month for transaction fees. So every 10 minutes, a Bitcoin miner who successfully mines a block gets a 6.2 Bitcoin for that block. But there are also transaction fees attached. And generally, they've been quite low throughout the year. But we've seen in certain months, in October, November, and already in December, we're seeing those fees increase, which means miners are actually achieving significantly more than 6.25 Bitcoin per block. So in some instances, even though the difficulty increased by, I think it was like 9%, so you'd expect a reduction in mining by maybe close to that figure, we've actually seen miners mine more Bitcoin because the transactions attached and are paid in Bitcoin gave them more rewards. The second thing is the Bitcoin price. So the Bitcoin price at the end of October was 34,000 and change, and at the end of November it was over 37,000. So we saw nearly a 10% increase in the Bitcoin price in that month, which helps the miners as well. So their revenues for each of their Bitcoin they mine is accounted for at the 37,000. So that was a great deal for miners. So we talked about the global hash rate increasing, but two factors actually give a little bit of help towards the miners, especially in North America, the ones that we cover, the ability to get more Bitcoin. So that just sort of sets the scene. The other piece I'd like to raise just before we go into the summary is HODLing and USBTC agreed their merger on the 30th of November, and from the markets they were able to transact in their new company, which is HODLing Corporation, with effect from the 4th of December. So that's a merger of equals, and there's 88 million shares available now, and that company will then start to obviously report as one whole company. And they did provide a report this week, but it was too late to get into my article, so won't be covering the report in any major detail. But suffice to say that in November they actually mined 390 Bitcoin, an average of 13 Bitcoin a day, and they've now got sort of an operational self-mining hash rate of about 7.3. Aside of that, they've also got a hosting business, which is quite significant, 17.9 exahash, supported by 680 megawatts of power. And then they've also got the HPC. So they've got the data centers providing a different revenue, which isn't linked to the price of Bitcoin. So that really helps them out that way. So if Bitcoin does come down in price, they've got this other revenue stream that will bring in much needed margin to support the other elements of the business until the price Bitcoin recovers and gets back to where it should be. They've also got these GPUs which they're looking to use for high performance computing in the AI space. So we'll get more updates from that. But I expect, once the land's settled a little bit, give the company time to sort things out. And we've already seen, I think your last podcast, there wasn't a great deal of information at that point because it literally just happened. We're seeing now updates coming out every day, and there was an update out today which I've already tweeted on. But they're bringing out the updates fast and furious, and I'm sure in the early parts of 2024, they'll be back in the tables, getting their updates out in time for that moving forward. But yeah, very positive news for HUT. Now that the one company can sort of start doing the comparisons against their peer companies, and that's an interesting podcast maybe to cover in the next week or so to have a look at what the valuations of some of these companies look like from a hash rate perspective. But that's to set the scene there. Yeah.
Gotcha. Yeah, I'm glad you brought up the HUD-8. We had Sue Ennis on and Asher from USBTC, one of the co-founders. Obviously a lot going on there. Sue also expressed that a lot of the financial platforms had inaccurate share count and market cap. So some people I know on Yahoo are showing over $2 billion, but I'm glad that you brought that up, Anthony. 88 million shares. And I believe Sue said around $830 million market cap. So definitely a lot going on there. Nice to see the numbers and the merger coming back around, and we'll continue to follow that one, as I know a lot of people are invested in HUD on the channel. So great kind of macro table setting there, Anthony, talking about the factors impacting the mining results for the month. So let's get right into it. You've brought along some of your charts. We're going to show those up on the screen, kind of talk through them as we go. For anyone who's unfamiliar with Anthony's work, he's really well known for putting these tables, data tables together and comparing the results of the miners, along with coming up with new metrics. So Anthony, let's take the viewers through what you've got here.
Okay, so as I explained, the hash rate difficulty should have impacted the number of Bitcoin. But if I look across the miners, the majority of miners actually mined more Bitcoin per day than they did in the previous month. And again, that's down to the fact that they're getting paid more transaction fees as part of their Bitcoin rewards. And so that gives them a little bit more Bitcoin that way. The standout mover in November was Marathon Digital in terms of actually energizing the remaining 4 exahash at Garden City. So they've achieved their long-term target, which has been a target for a while now. They've got the 23.1 exahash in North America. And aligned to that, they've got their joint venture in Abu Dhabi and another joint venture in Paraguay. So total hash rate that they are at the moment is 23.7, and that will slowly increase as Paraguay and Abu Dhabi is due to get to reach their target of 7 exahash in January, and 1.4 of that exahash as part of the JV is Marathon Digital. Paraguay as well, the JV is more in sort of favour to Marathon. I think got 80% of that JV, so that one will grow slowly. They have got a short-term target of getting to 30 exahash, and we know that once they get to 30 exahash, there'll be probably another announcement with another plan to play catch up with the likes of Riot in terms of when the next big orders are coming through, because we're still stunned from that information we received the week on Riot platforms.
Anthony, just to interrupt there, you guys, we had Jason Less from Riot and Fred Thiel from Marathon on the channel recently, so make sure you check out those videos as well if you want a little bit more detail on some of those purchase orders and the joint ventures that Anthony's talking about. Sorry to interrupt, Anthony.
That's no, fine. So Marathon mined 1,187 Bitcoin, and that was by far the highest amount of Bitcoin. Core Scientific, 954 from their 15.2 exahash. And the good news from Core Scientific is it looks like January and probably in the first 2 weeks of January, it looks like they'll come out of their Chapter 11. So they're basically getting prepared now. They've gone to the market or gone to their shareholders for some more funds to give them some more cash flow. They are also looking to expand on that 15.2 exahash. So adding a further 6 or more exahash to that to get them over that sort of what we call now is the magic 20 number, and a number of miners have got orders in to get over that. So this is like, sort of like a mini competition as such like that. So they came in there, and then we had CleanSpark coming in third in terms of total production, and they mined 666 Bitcoin during the month of November. So that puts them, clearly over 20 Bitcoin a day at their 10 exahash. And, we're talking 7 months' time, they will have doubled that hash rate. So now they've released that they're going to achieve their 20 exahash by the sort of like probably the end of Q2. So 6 months into the new year. But that's double from where they are now. Now, bear in mind where they were at the start of the year. They've come a long way in 2023. So 2024 is going to be equally potentially a very good year for them. And I'm sure as they're getting close to getting to that 20 exahash, they'll also have their sights on other facilities going forward and how they can increase that hash rate. Because I think we mentioned on the show before, growth of hash rate is really important. If you're not growing hash rate, you're literally falling behind. And some of the miners haven't grown as much this year, but we've seen orders coming through thick and fast. We've talked about the Bitfarms deal. They ordered an extra 10 exahash, takes them to sort of 17 exahash with potential to get to 21. They reached that magic 21 number. If they can get to that, in the next sort of 12, 18 months. We've talked about the Riot deal, which was mind-blowing. That gets them to 35 exahash in early 2025, but they've also got an option to get that hash rate to 3 digits, to over 100 exahash. That's really impressive. CleanSpark's getting to 20. Even some of the other miners like Bitdigital, so they increased their hash rate by I think 11 or 12% in November. They got to 2.25 exahash, and as we speak at the moment, they're installing another 2,500 miners. So they're installing, I think, the S19Ks, which per miner gives them 120 terahash per second. So that's a good miner to install there, keeps their efficiency down there. So they're going to be 2.5 exahash, probably end of this week or maybe early next week. They had some great news as well in November. They've got of the 4 or 5 miners that are looking to move into that HPC space to provide services in the AI area. Bitdigital came to the party last. They announced, after everybody else had announced, that they'd set up a facility in Iceland. They bought the GPU servers, and then they announced they got a partner to provide a service too. And that revenue is, for the first year is a minimum of $35 million. So for a company a bit digital, that's a fantastic achievement. We know that the HPC side is very, very profitable comparison to Bitcoin. So we'll be looking forward to maybe their first quarter results come the end of Q1 in 2024, just to see what that sort of margins are looking like. But that's a really positive mood there. It's a 3-year contract, but 3 years with a customer, and that's what you need out there. So some of the other miners are in this space, but they're still to align to those big customers. Bitdigital went ahead and did it, so positive to them. From Riot's perspective, Riot, again, the production was down again. So, they've had a low production throughout the year. And, we've looked at that and said, it's not great, from a Bitcoin mining perspective. However, during those summer months, they realized an enormous amount of energy credits by curtailing their energy. So they were making these decisions to, when the weather was hot and it was more beneficial for them to switch off and actually sell that power back to the grid to earn more money than Bitcoin mining. They made that decision. Now we're getting into the cooler months. We're not seeing the Bitcoin production is increasing slightly, but not to the levels of their peers. they achieved about 1.8 million in energy and demand response credits for the month of November. So not as high as previous months, because those really big figures are generally between the months of June and September. So 4 months where they can really earn during those sort of peak weather months there. But they're still getting a little bit, and if you were looking at that from an equivalency and adding that to their production, it still brings them short of what CleanSpark did. Now, Riot are on 12.5 exahash, CleanSpark are just over 10 exahash, and so you would expect Riot to be achieving at least Bitcoin and equivalency of the same level as CleanSpark. So that's something to look at, going forward, see if they can get their numbers up. But the good news was they actually got the buildings F and G look like they're functioning fully now. They're at 12.4 operational hash rate, and I think maximum was 12.6. So they're literally 200 petahash from maximum self mining at the facility in Whinstone, and then everything now is focused on Corsicana. So that 1 gigawatt site there is they've been working on that now for in excess of 12 months. They've got the big orders going into that there. So they have the first order of 7.5 exahash. Now this other further order of 18 exahash that will go into Corsicana over the next sort of year, 18 months, and get them to that 35 exahash. So we can see the positivity there. Other miners that noticeably did well this month, DMG blockchain actually had a good month. They're a smaller miner. They mined 65. But some of these smaller miners, and I'll include SATO technology in that conversation as well. So, these smaller miners, are doing things really well in terms of production. They seem to be getting more out of their machines. It may be because they're able to manage those smaller sites far easier than, say, some of the other miners who've got maybe 10, 11 sites in different countries. But both of those did really well this month in terms of the tables. If we, when we get to the end of the year, it'll highlight how well they have done compared to some of their bigger peers. So that's really a very quick overview of what was happening, in November. The big stories that came out there. Lots of new orders coming through. We'll still see the orders coming through now between now and the halving as these miners get ready to drive their efficiency down, and that's key. If the efficiency's down, it means their energy costs to mine a Bitcoin are lower, and the energy cost, no matter what other costs you consider, is the biggest cost that these miners face going forward. Yes, they have to buy sites if they want the infrastructure. Yes, they have to buy mining machines if they want to mine the Bitcoin. But the energy cost, as we go through the halving and every future halving, that energy cost is doubling every time. So, if the energy cost to mine a Bitcoin now is at $12,000, $15,000, that's going to be $24,000, $30,000 come the halving. The next halving, that doubles again, and that doesn't take account of any inflationary action that might happen between now and then. So, it's not unfeasible to understand that in, say, 4 years' time, it could be in the realms of $50,000 of energy to mine one Bitcoin. So that is why, the energy cost is something that, get these miners to get the efficiency down. So Bitfarms, who realized they needed to change, a lot of their miners in their fleet, they were aging, they've done really well with what they've had, they've top of the production tables, but they put that order in to get their efficiency down. And that brings them down to a really competitive level with the likes of CleanSpark and Marathon and Riot. And we're seeing other miners do that as well. So, good focus for the month of November.
No, it's a great summary, Anthony, and we definitely are big fans of Bitfarms and CleanSpark on the channel, so it's great to see them performing, making some big moves. But I'm also glad you brought up BitDigital. That's ticker BTBT, because that HPC order really flew under the radar, and that was monumental, really, for any of these companies, but especially one the size of Bitdeer. And then the other thing, we've had DMG on the channel, we've had SATO Technologies on the channel, and one of the concerns I know from the retail audience was a lot of these smaller companies may not have the balance sheet strength to make it through halving. But now that we're seeing Bitcoin price moving such such aggressively to the upside, or so aggressively to the upside, it gives them a lot more flexibility. And like you said, because they've got a smaller operation, maybe it's easier to manage, or maybe more time per machine, or I don't know what it is, but they do seem to perform very well on a per machine basis or per exahash basis. So that'll be one to watch. And I'll let you guys know we do have Bit Digital on just before the holidays there for an interview to talk about that HPC development. So great intro, Anthony, and we'll keep moving on here. So what's next for us?
Yeah, so if we go down and look at the metric that I like to use is the ranking the production by Bitcoin achieved per exahash, because what you have then is you have a level playing field. Every one of these miners has a different hash rate. So the only way to compare them is to say, how many Bitcoin would you have mined if you had 1 exahash? And so that sort of, I've used that now for probably the last 3 years, and it's a good metric. And I know that some of the mining companies themselves use that metric because they're always interested in what they do themselves, but they're equally interested in what the opposition is doing as well, what their competitors are doing. So, everyone's very focused on this. And so when we start looking at for November, the company that came out top for November was actually SATO Technology. So SATO Technology were able to inch 67.8 Bitcoin per exahash and just pipped HIVE Digital by 0.2 of a Bitcoin. So HIVE was second, and DMG, another miner that we just mentioned, one of these small miners, they were in third place. Interestingly enough, though, if you take sort of like the top 6 or 7 miners, there's very little to choose between those. The amount they're producing, and actually, in fairness, they should be very close together. When these companies are mining using hash rate, if the hash rate's on, then they should be producing the same amount of Bitcoin. There is an element of luck. So, if we've seen, small individual miners who've got maybe 10 machines win a block, that's really lucky. That's like going out and winning the lottery.
Well, that happened in November, right? Didn't a single machine hit a block?
It's probably easier to achieve the winning lottery because it happens, maybe 3 or 4 times. And what that does then is it takes that block away from the majority of miners who are in a pool trying to win that block. So there are probably accounts for less than 2% of the overall. So with an amount of certainty, a lot of these miners can sort of like they have contracts which will give them effectively what they're expecting. What hash rate should you have delivered if your hash rate switched on? Versus what you receive. There's some miners that will give you literally what you're expecting to receive, and obviously they pay a small fee for that. If we go to sort of like the other end of the table, Riot, obviously we've explained, they were curtailing in the month of November, earning these extra credits. So there, they achieved 44, which is like 50% lower than sort of SATO Technology. So we'll start looking, a little bit more at Riot, and now that they're not earning as many credits, are they able to get the miners up and running at Windstone and start delivering like their peers are there? And one of their peers is Bitdeer, which is literally about 500 meters away from them facility, and Bitdeer are able to achieve more Bitcoin per exahash than Riot. So we'll be focusing a little bit more on that going forward to make sure that's right there. Marathon.
Hey, Anthony, before you move on to Marathon there, do you account for any of the power credit equivalencies in this Bitcoin mined per exahash, or is this just a straight calculation with all that removed?
This is a straight calculation.
Gotcha.
Of Bitcoin itself. No, I do have a graph that does include it, and that's what I call like the revenue by petahash. So how much revenue are you driving? And I include the credit because I think that the miners who use that strategy need to be, it needs to be, shown that they're doing something to achieve it. Now, if you're getting a credit, a credit will reduce your costs. So it's the same impact of having revenue. It's the same, it's the same. It's just a reverse transaction, but it's the same effectively. If you can, get sufficient credits in, you aren't paying a very big energy bill. And if you look at Riot's last quarterly update, their last quarterly update was highlighted what the credits were all about, and their it cost them literally about $1,000 to mine a Bitcoin, which was like, when their peers were paying sort of 16,000 per coin, Riot have got it down to an absolute science, where they can do it for 1,000. Yes, the credits are future credit off future bills, so they're not, it's not like they get a payment that day then. But at the end of the day, if I'm getting a credit today that comes off my next bill, that's still a financial benefit to me. So I do give them recognition in one of the tables, because I think it's important, to look at if they're using their mining machines to drive something, then it should be all accounted for. And the other companies that announced what they do is Cipher Mining as well. They also announced how much Bitcoin equivalent they do from using their energy strategy. So really good. So that's the production by exahash. The next one we'll talk about is the revenue by energized petahash. So for every petahash, what is the revenue that's driven there? And we can see Iris Energy came out top in that one there with 2,505. HIVE, CleanSpark, DMG closely followed. Iris were at the top because of the energy strategy, so they managed to, I think it's like 3 Bitcoin extra, which means they've got their fleet that is out there utilized quite well. So they're getting the majority of what they can earn out of that there. At the other end of the scale, Argo blockchain and Marathon, just under 2,000 per petahash. But what we've seen with some of these miners that have not done as well in their monthly updates, there is some improvement. So the numbers are improving for some of these companies, and we'll come to that at the end of the when we come up with a summary table year to date by exahash, and that will clearly show that some of the miners are actually, even though the difficulties is making it more challenging, they are improving production. So revenue by petahash, really good statistics to look at. The next chart is the Bitcoin sold. So in 2021, all these miners were hodling everything, because we saw the Bitcoin price literally rise over 100% in the first 6 months, got to a high of 69,000, and there were lots of people out there predicting we'd get to 6 figures by the end of 2021. And, probably everyone in the space had that sort of like wanting to be, not miss out on anything. You even had some miners buying Bitcoin to sort of like, try and make it, make a sort of an educated guess that the Bitcoin price would rise, and then they could, sell that Bitcoin and make a profit just in buying. But as we saw in 2022, the lows of Bitcoin started to, the price started to drop, and we got to December, so a year ago from now, and the Bitcoin price was around about 15,000. We've seen the strategies change. So even the most ardent miner, and I'll say were probably the ones that were least, I can even quote Jamie, 2 years ago, Bitcoin would have to get to $500,000 before we sell one. And, even the most ardent hodlers have had to sort of like look up a strategy to help them get through this. So we're seeing all the miners now sell an element of their production to cover operational and capital costs to grow as well. And if you'd have done some analysis going back over the last sort of 12 months and look at all the strategies, then the best strategy would have been to sell some of the production, maybe not all of it, but some of the production to cover those costs. That would have been the best strategy, as throughout the year. So in terms of production, Marathon sold 700 Bitcoin, which represented 59%. So they sold the least percentage amount of their production of all the miners. CleanSpark again decided to hodl a significant amount, and they only sold 6%. So they retained 4%, growing that balance of hodl for them, which sort of has really grown over the last sort of 4 or 5 months. They were getting down to a very small amount, and then their strategy just changed. and they started like literally hodling everything. And then last month they sold quite a bit, and this month they've sold 60%. So they're looking at sort of like, you know, the price of Bitcoin and what's the expectation. We go into the halving and maybe thinking now's a good time to hodl. So all these miners are making these decisions here. And if we look at the table, only 5 miners didn't sell all their production. So we had the likes of SATO, Technology, Bitfarms, and Riot all managed to add to their treasury and increase their balance sheet position. At the other end, we had a few miners that sold more than 100% of their production. So some were actually selling a little bit of their hodl as well to cover costs. And that's not, you know, if you're going out and putting out big orders, and we talked about Bitdigital, they got out and purchased like, you know, 5,000 machines in recent weeks. And they're installing half of those machines as this video's, you know, being produced. So they literally sold a portion of their hodl to help cover those sort of costs as well. So that's not unexpected. And I think if shareholders understand that, you know, if a company's growing hash rate and, you know, using those levers that are available to a company, you know, and really at the moment, there's only 2 levers available. One is to sort of dilute shares, and the other one's to sell Bitcoin. I think the debt side's probably taking a back seat until the markets, you know, regain that sort of confidence in the sort of like this business area. But Bitdigital, you know, growing hash rate, selling some of their hodls. They've still got a reasonable amount of hodl, certainly for the size of the company. So, you know, we look at miners going through that halving next year, you know, all about efficiency of machines, all about, you know, keeping the costs down, and all about having some cash or a strong balance sheet to get through. And Bitdigital sort of ticks those 3 boxes as one of the sort of like, you know, that mid-tier miner who, you know, are they going to struggle? They probably got the resources to do it. Now they've got this agreement for the HPC in Iceland. That's going to make them even more stronger as we go through. DMG also sold more than their production. So they sold 151% of their production. And they put out an order for the latest, I think the T21 miners from Bitmain. So they're looking to grow their current hash rate of 1 exahash and literally doubling that hash rate over this next period there. So, you know, a great move by them, getting the most efficient machines. That's just a company that's grown organically from nothing into a really good miner that tends to get the most out of the machines. You know, generally have pretty much good production numbers. Again, on the cost side, they tend to keep the costs down to a minimum. They're not as big as some of the other peer miners. So, you know, cost is important for those, but they're just doing things right. So that's the sort of the Bitcoin sold as a percentage of production. The next slide is we look at which miners were able to utilize their fleet better than everybody else. So we look at, you know, a case of utilization. So, you know, what percentage was available from what you had there. So if you had like, you know, 1,000 miners and you're able to switch on, you know, 1,000 of those miners for the month, you know, you're at 100% utilization.
It's essentially uptime, eh, Anthony?
It's uptime, yeah.
Uptime.
Exactly. It's uptime. So you know, when we look at the companies that have got high utilization, you know, HIVE, Digital, and CleanSpark, we're really at the top of the tree there. We, you know, both 99%. So really good utilization, and not as a total shock. Those 2 companies, you know, along with Bitfarms, have been leading the way, you know, throughout 2023. So, you know, but we go down to at the other end, you know, you've got Riot, you've got Marathon, you've got Argo blockchain, sort of in the 70 to 80% range. So there's more expectation. So right at 70%, they got 30% of their fleet. What they could do with, you know, switching on, you know, far more often than they are at the moment. Hopefully the cold weather that they receive in Texas isn't as cold as expected, because if the cold weather's bad, that also has an opposite performance issue as opposed to the hot weather as well. So, you know, but it's a good chart to have. It lets you know, the retail investors, you know, again, it's just another metric to look at. Never take these metrics in isolation. So, you know, you could have, you know, one miner doing great on one metric, and they may have the highest cost of energy on another metric, and therefore, you've got to have an understanding of all the metrics and before you sort of like make any further decisions. So, do your own analysis on this. This is just me just doing, some of the charts that come out at the end of the month, just to give you a head start, really, where you need to be. And that brings us quite nicely to the final chart, which is the actual summary chart. So this is then looks at the monthly performance from production for those miners for the past 11 months. And I can sort of, for the last 2 years, it's been the same companies that have been in those top 4 or 5 spaces. So what we've seen, HIVE Digital had phenomenal 2021, and they had a good 2022 as well, up until the Ethereum merge, and they had to stop obviously Ethereum mining, and then they focused on the Bitcoin side of things, and they've increased their hash rate. And again, we haven't mentioned HIVE Digital put in another order. They've just procured another 5,000 S19 machines to drive their hash rate up, and those machines are going to be installed very quickly. So we'll see that benefit of that purchase in the next update. So they're driving that. They're driving their high performance computing again, and so throughout 2023 they've lost the top spot to Bitfarms, but they're still there. Even though they've stopped the Ethereum mining, they've still had month on month really great performance. Bitfarms, I think I mentioned on before, they've been so consistent throughout the year. In fact, actually, I think November was probably their worst month if we look at their production. But because they had such a good first 10 months of the year, they've still maintained that #1 ranking.
And a massive run in share price for Bitfarms in the month too. I wanted to call out.
Phenomenal run in share price, even just in the last sort of like, if you look at the last 12 days. I mean, they announced two big announcements at the end of November. The first one was that they were diluting 60 million Canadian dollars worth of shares, which whenever a miner goes to the market and says we're diluting, the share price is going to go down. And the share price dropped to the sort of like the offer price to the investor who was buying those 60 million shares. So basically, shareholders had the opportunity to go in and buy it at the same deal. Now, whether the shareholders went in and bought at that rate, which actually dropped to just under $1, I think it was like 99 cents. It had been like 120 the day before the announcement. So the share price did take a 20% hit on the day they announced that. The next day, and this is probably the sequence of events, they announced the massive order of machines coming in of 10 exahash. Now, whether you have to secure the funding or agreed funding to cover that sort of the deposits on those machines, so the order that it came in there. But what we've seen now in the last sort of 10, 12 days is the share price has gone from literally $1 to $2.50. And so, that's 150% increase in 10 days. And that sort of share price increase is what we talk about why our retail investors want to be in this space. This is very volatile space to be in. I mean, Bitcoin's volatile. The mining stocks just take volatility to another level, and that sort of price rise there was phenomenal. And we also saw other miners benefiting from a nice green run through this early part of December. But if we look at like when the Bitcoin price drops this week or this weekend, and the markets opened yesterday, the Bitcoin price drops 2 or 3%. The mining stock can go down 20% in a day. So
and what I'll say there, Anthony, for a long time the price was very correlated like that. You would see oversized moves on the miners based on Bitcoin, right? So Bitcoin's up 1 or 2%, the miners are up 5 or 6. Then for a while it almost disconnected, and we were seeing days where Bitcoin was up, miners were down, and the inverse. Now it seems that correlation is back and that leveraged opportunity on Bitcoin. So it is nice to see. I know for a few days I was saying, oh my God, Bitcoin's going up. My thesis is correct, but my miners are going down. What's going on? So I just wanted to call that out. It's nice to see. It's something we've talked about on the channel, and it seems to have kind of gone back to what we'll call normal.
Yeah. And so, if we go to, so we've looked at sort of like, the Bitfarms HIVE, you've got the likes of SATO and DMG who've had excellent years. They're showing like 4th and 5th in the table. We go to the bottom end of the table, and it's going to be Argo and Riot at the bottom too. But if you look at the table and look at the monthly increases in Bitcoin per exahash, where the top miners have actually been reducing because they're so efficient at mining. And the difficulty, and that global hash rate's increased by over 100% this year. The difficulty has impacted, all miners, but we've seen increased performance from some of the low-performing miners earlier in the year. So their sort of production graphs have actually increased, whereas some of their peers who've done really well have not been able to maintain that. And rightly so, unless you're growing, if you're operating at the highest efficiency level, you've got less to improve on. Some of these miners, Argo and Riot, have had a challenging 11 months, but the last 4 or 5 months, we've definitely seen green shoots as they start, improving month on month, and hopefully they'll continue to improve month on month and get back to where they should be, where they were in 2021 when they were producing solid updates on a monthly basis. But that's sort of a very brief roundup of effectively what happened in November. We saw miners making big orders. We saw effectively, even though the global hash rate increased, we saw production numbers increase because of the fact that miners were benefiting from increased transaction fees. We saw a welcomed increase in the price of Bitcoin. So all the revenues, if you just look at Argo blockchain, their revenues increased by 25% month on month with 1 day less mining. So that's a much needed revenue stream coming in. And, of all the miners, going forward, they're the ones that, need to, plan costs effectively to get through the halving and to, to maintain their existence really, because it's a challenging time for some of the miners. So that was much welcomed. The Bitcoin price early today was sort of, I think, 41,000. So looking at what the end of November, when it was fixed at 37,000, we've seen another 10% increase in the Bitcoin price. It was probably up closer to 20% when it reached 44, nearly 45,000. But it has come away a little bit. But we're still seeing it stabilize above 40,000. So if you can keep up 40,000, that will help the miners again in December. It's booking that revenue, at a higher rate than it was in November. So, difficulty, yes, is going up, but it's been offset by the actual revenues. And we're seeing the transaction fees in December are equally as good. If we just look at, I was able to see the Marathon wallet yesterday, and they've already achieved in the first 11, or I would say 10 and a half, 11 days, over 550 Bitcoin. And they're on track to probably get close to 1,500 for the month of December, and that would be an all-time record for them. And that would be probably about 20% higher than they've done in any one month. And that's obviously thanks to getting the Garden City site up and running. So that extra 4 exahash going online is a big positive for Marathon, big positive for their shareholders. We were talking about this 23 exahash over a year ago, but they've got that in place now. They probably learned so many lessons over the last 12 months, and who's to say where that exahash is going to be at the end of 2024? I would expect it to be significantly higher than what it is at the moment. So, yeah, positive things in the space. A good month for reporting, and looking forward to seeing for December's update in a few weeks' time.
Hey, and we still have the ETF spot Bitcoin ETF approval. We've still got halving. We've got the Santa Claus rally. I'm sure Bitcoin and Bitcoin stocks are going to be the subject of many turkey dinner discussions this year. So Anthony, thanks so much. Obviously a very in-depth analysis. This is exactly why at the start of the video, you guys, I said Anthony's really becoming a household name in the Bitcoin mining analysis community. We love your charts. Feel free to go through, pause the video, and take a closer look. You guys, Anthony, thanks for your time here today, and we really look forward to having you back.
Thanks, Bryce. Thanks for having me.
Take care, you guys. Make sure to hit the like button and subscribe if you're not part of the community. We'll see you in the next video.